Up only season in crypto continues today as Bitcoin approaches 52,000. ETH has moved into the 2,700s. Apparently, Russia is putting nukes in space. Crazy times out here. All of that and much more today on Money Never Sleeps. Welcome back, everybody. Thank you for being here with us today. Chris, Randy, always appreciate you guys joining us live. If you have not yet, do us a favor. Hit that like button. Subscribe to the channel if you're new. Nothing that Kevin or I say is financial advice. We're just a couple guys who enjoy following the market. So please do your own research for making any buys or sells. Kevin, I woke up this morning to $52,000 Bitcoin and ETH approaching 2,800. What a day. What a day. What a day. Our resident bear, how are you feeling?
Feeling great. All I got to do is look at the 5-minute chart and everything is pretty much verified for what we're seeing. Nonetheless, if you're a Bitcoin holder, congratulations. You got some value to some of those assets. It's going to be interesting how it plays out because we're going to pull up some other data and stuff like that on these charts soon. Even if we do see a bit of a pullback, which I think is likely, it's still going to be around 48,000, 50,000. So is the bear market here? Who knows? But I think we're getting a little too bullish.
It's a bear market here. What are you talking about? It's up only season.
Well, we'll see. We'll see how long that lasts. But at the end of the day, I do acknowledge that we are doing pretty well in Bitcoin for the time being. Also, I don't know if people realize this, but CZ got pushed back his trial till late April. So the man's free. He's free as can be right now. Some cell in Seattle or wherever he's being held, but he gets to see the light of day for a few more months.
All right, Scotch and Stocks, welcome back. Good to see you. Drop that trade in the comments. Kevin and I are happy to comment on it. Kevin will probably give you better analysis than I will, but feel free, fire away with it. Would love to hear what you're cooking up over there. What has been your main focus, Kev? I've been, with crypto, we've kind of gone back and forth. Like, I know that you're under the belief that there's no more liquidity coming into the markets. I would say the inflow that we saw into Bitcoin ETFs over the last 36, 48 hours might tell a different story. Trying to think back and asking ourselves, where is the money going to come from to continue to move these numbers up? I will say, looking on the bull case, because I know you're going to cover the bear case, I'll cover the bull case. We saw last year repeatedly, and we discussed on the show, that a lot of people were left with their dicks in their hands, sitting out of the market, not being involved in risk assets, having their money in bonds, in money market funds. And I think that could be a spot where we're starting to see some money flow in. That's my bull case right there, is we had a lot of people who were sidelined last year. And were you laughing at the
yes,
comment?
I was.
Okay.
Yeah.
So I'll go through mine real quick, then we'll go to Scotch and Stocks comments. But that would be my bull case with crypto, especially Bitcoin, is that people were sidelined. They're looking for somewhere to move their money. Maybe they see the stock market as being a bit frothy and overbought at this time, and they're seeing crypto as, hey, like, it's more viable now. We can put this into our IRAs and our 401ks and stuff like that. So that would be my bull case for a continued move up in crypto. I don't know if we're going to see all-time highs in the next, couple of months, as some people are predicting, but that would be my bull case for why it is still good to hold crypto. Now, I will say, just for like transparency, I was DCAing for a while. I've stopped doing that as of the last just like week or so, because I do think that we're getting into the overbought territory. So I am comfortable just sitting here in my crypto positions, watching things move. But that would kind of be my thoughts there. Do you want to comment on the ARM trade that Scotch and Stocks is talking about? Because this is something that you discussed on yesterday's show, I believe.
Yeah, we talked about it a few times this week. ARM is definitely a company that we're seeing an insane amount of pump. How accurate is it? Who knows? However, it doesn't pass the smell test for me. I think with a trade like this, and again, I consider doing it too because I know that March 12th that stock unlock is going to be massive for them, and we know that they're in so much pain after what happened with WeWork. We also know that their liabilities outweigh their I believe their actual value, their market cap. So it's really interesting to see if this is going to be something that they need to do to dump it in order to make some cash. Question is, how long is your time horizon? So I think that's the key thing here, because again, if they own that much of the asset, it's probably going to be dumps from here to there unless they necessarily need the cash extremely fast. But I definitely don't think it's a bad idea. I'm not personally doing it myself. I think in theory it makes sense because everything's kind of lining up. And again, March is also a really bad month when it comes to liquidity in the system kind of drying up, because we know that a lot of these facilities that offer liquidity are going to be drying up as well. I don't necessarily think that the price of ARM is going to continue to pump as much as it is. However, I could be wrong here, right? We do know that a lot of these bubbles, these tech stocks, are just in mania phase right now. I pulled up Michael Burry because I saw that he had changed some of his positions, and he pretty much got rid of all of the semiconductor shorts. And I think that's a pretty smart thing to do, just because in mania phases and stuff like that, unless it's just a little bit that you're putting forward, you could lose a lot of money just because everything is just so absolutely insane. So this ARM trade, I think it's not necessarily a bad idea. It makes a lot of sense. Let's see. April 16th, put options extreme high risk, is not a financial advisor. Yeah, yeah, I think it really depends on your strike price and also pretty much the time before the expiration date. So a lot just for me for the banks and stuff like that, everything for me is about a year or so out just to be safe. But I think that's just that long term horizon you kind of have to have, given where we are. We haven't seen any signs of downturn yet. So if we do see anything, which I do think is probably going to be more rapid than it is going to be kind of a slow bleed, even though I know that they're going to have to probably offload, over the course of weeks to months. I think that there is a good chance that you could see some of those gaps down in some of those sectors like, chips, semiconductors, and AI. So it's definitely an interesting trade. I don't think it's a bad idea. I think be careful. Again, make your own financial decisions and also assess risk and the time horizon.
All right. Good stuff right there. What else today has been on your radar? It's equities are having a bit of a rebound from yesterday. I mean, obviously with the move up in crypto, Coinbase is going absolutely crazy, almost 14% to the upside. Another massive gap on the daily if you want to look at that chart. But if we want to talk big picture for a second, Russia's putting nukes in space. That's fun. Anything, being serious for a second, anything that's actually caught your mind, though, from a macro view, anything going on? You're our Asia expert. So anything going on over in Asia that's caught your eye, in Europe, maybe South America? I don't know. You've been all over the globe.
Yeah, man. It's really interesting right now, and I think more or less, I think the narrative is also shifting too. When we saw that inflation data yesterday, because inflation did come down, people need to remember that, but it just didn't come down as fast as we wanted to. Right, it went from 3.3, I believe, to 3.1, and a lot of people definitely got spooked because it means that we're probably not going to see a rate cut. The interesting thing is, I'm seeing all over CNBC and Bloomberg that these that we're probably going to see inflation be a problem from here on out. I disagree. And I think that inflation is the reason we're going to see deflation. Now, does that make any sense if you just say that out loud on the street? No, you're going to sound like a fucking idiot. However, the thing with inflation being problematic here is the inflation being a problem last year when there was a lot more money in the system. The BTFP was around. There was a lot of money that was able to be issued, right? So even though debt was being constricted, it wasn't being constricted to the level that we're probably going to see in the next few weeks to months. Now, that's problematic because if we're just seeing consumer prices go up, however, the demand for global output is dropping significantly. I mean, I can pull up the oil chart right now. Actually, I'll pull up this tweet here because this is kind of telling of what we're seeing. I think global demand's the issue right now, and we're seeing 1 month of inflation just kind of coming in stickier than expected. That's driving a lot of people's sentiment to the fact that we're probably going to see inflation resurgence. I think it's quite the opposite. I think that there's people who are probably limited here in terms of how much money they have on hand. Kind of lines up with what we saw with the consumer credit numbers dropping significantly. But this is from Financial Juice, and Chris actually sent me this. This is OPEC crude oil output fell by 350K barrel, not billion, 350K barrels per day to 26.34 million barrels per day as new round of voluntary OPEC cuts took effect. So we're seeing that oil production is also dropping, which is pretty telling that we are seeing demand dropping across, the globe. Natural gas is also dropping significantly. If we look at that chart, that thing's at like $1.69 right now per contract. So it's extremely cheap for natural gas. I'm not saying that cheap is all undervalued. I'm just saying it's something that's dropping significantly here. So I think that there's a lot of conflicts that are also happening over in the Middle East that are kind of inflating this price up. We're also seeing the fact that they're cutting oil production. I'm not necessarily sold on the fact that inflation is a problem that's going to be here for a long period of time, because there's only so long you can kind of bullshit the narrative. And I mean this in terms of oil, what's going on here, or, the fact that consumer prices are going up. Demand has to meet that. If demand doesn't meet that, you're going to see everything just drop significantly. That's going to be the deflation that I think the inflation right now is bringing. I think the market kind of has to call bullshit on that. People have to not buy as much. People have to pretty much sit on their hands, and some of these companies have to kind of eat a little bit of shit in order for, us to truly see that we're in a deflationary period. Demand has to meet supply. If we don't see that, we're not in an inflationary period. A lot of people that are betting on, rate hikes, and I saw Citibank saying that we're going to, do a rate hike. And the question, it could happen. It could happen. I'm not disregarding that. But the thing is, we're in a place where this could shift quickly. And the higher these rates are, the harder it is for people to kind of buy in and feed that inflation narrative, because demand will just drop significantly. So I think that's a narrative that is being told right now on mainstream media, and it couldn't be further from the truth. And after yesterday and just looking at the numbers, it's something that we have to keep in mind, because I don't buy the fact that we're in an inflationary period. We got an inflationary number. We did not get evidence that we are definitely going to higher prices, kind of stagflationary. I think that stagflation for the time being is going to eventually turn into full deflation.
All right. Looking at the week ahead and what else we have. Sorry, I had a total brain fart there. We got retail sales data tomorrow. More about the jobs market. Friday, we'll get PPI, some housing data. Where else do you think, in the short term, we need to be looking? I moved out of some NVIDIA. I'm kind of holding steady with what I have in crypto. So I am probably the least active participant in the markets right now. I'm just kind of chilling. Once again, the year of do less. We're just kind of hanging out. But is there anything that you think is actionable at this time, or is it still just the wait and see approach?
I will say this real quick before we get into that. Scotch and stocks, but they will print just their way out of deflation. Yes, they will. However, consumer credit, credit will still be limited to, loans being taken out. So the creation of credit will be definitely still problematic for a period of time, but they're definitely going to set the stage so that we could definitely get QE in the next few years, but it's definitely going to be still problematic for a while. So I think we could be sitting on a bit of a crisis if it does crash for a period of time. But I do want to pull up something, because that kind of reminds me of something that we did see in earnings yesterday. Kind of tells us that we're also in the same place, right? And I think this is probably a really good sign of earnings too. We'll get to Lyft in a second, because that was just an absolute fucking debacle. But
that was, oh my God.
We'll get to that right after, because that's
got
hilarious.
fired or taken out back and shot, either one.
Yeah, but this was also the other earnings call that happened yesterday that people should definitely pay attention to. Hasbro reports 20% revenue drop, issues downbeat 2024 outlook. Now, this is coming during the holiday season. We knew that they had a lot of problems, right? They're announcing that they didn't have good outlook for the holiday season. They had 20% revenue drop. That is massive. That is a terrible drop in the stock. We'll take a look at it too. But what is this? What is Hasbro? It's discretionary spending, right? If they're not expecting, a good outlook for 2024, it tells you that discretionary spending is most likely kind of in a shitty place for the consumer. So that's something that we have to keep an eye on. This is really telling, and especially this happened during the holiday season. In the era of Klarna and Affirm, seems like they still didn't do pretty well come, the Christmas holiday season. So that's one that I definitely saw that was absolutely terrible. Didn't make the headlines because everyone was obsessed with Lyft, but Lyft, man, what the hell happened there? The stock was trading at around $11. Next thing you know, the earnings come out, 500 basis points was written in the report, shoots all the way up to like $20 a share, 65%. 3 minutes later, all the way back down to where it was. Now it's up higher. And then now apparently there's like Lyft drivers that are on strike too. So it's just like a clusterfuck over in Lyft land.
I just hope that maybe whoever put that in the report sold all their shares real quick and was on a plane down to the Caymans or something to make a quick. That was how they made their nut and they got out of town, because you're not having your job a whole lot longer after that situation if you weren't.
No, not at all. I mean, I'm very interested to see what, probably nothing will happen from that. We're like, sorry guys, if you bought at 20, just hope that everyone kind of buys in underneath you and you get there. But this is the candle we got today. Massive gap, a huge shoot up there. I'm not going to do TA on this. I just kind of wanted to show people how much that we're kind of gapping up. But at the same time, that type of, stupidity that we saw in that price shooting up to about $20 or so, I mean, come on, that doesn't necessarily happen in the most bullish of instances, does it? Right? It's kind of manipulative, and it absolutely is. And for them just to say, "Oh, sorry, that was a typo," I don't know, man. That seems like something Gary Gensler should be getting on, if you ask me. But definitely seems like this is one that is creating another gap, and I think a lot of these gaps will get filled. Interesting thing though is that it fully filled this gap from back here in February of 2023. So I think that if we start trading sideways and we don't create any gaps for the next few days, if something does happen in the system, we get a bit of a sell-off. I think this is going to be filled right back up. So maybe people are hoping that that bought at 20, it goes up a little bit more so they can get out and break even, but I'm not necessarily sure. It seems like that was a pretty good move. It's up 34% today. No guarantees on Lyft, but I think that's something that might be going down if discretionary is going down. When we look at this Hasbro chart, the Hasbro chart's actually kind of funny, right? Even after that revenue dump, look how well it's doing today. It's up 3.05%. So it seems like the market for what it's worth is kind of just buying back everything. They're buying the fucking dip. Is that sustainable? Who knows? You can see that they're buying the dip also in the equity markets. 34 up for the S&P, 144 for the NASDAQ. Dow's kind of lagging behind, only up about 98. Russell's up 47. So it's kind of funny where we are sitting right now with a lot of these earnings, and we know that the big boy is reporting earnings next week, right? Tomorrow's a big day too. We got Coinbase, but next week is Nvidia, and I think that's why Nvidia kind of rebounded extremely well. It's at 732 right now. Some of the other ones are not doing necessarily that great, and by that I mean Apple, and I think that might be because Mark Zuckerberg absolutely demolished the Apple Vision Pro yesterday, telling everyone pretty much why that the Facebook, the Meta Quest, the Vision Quest or something like that, is a better value, better deal. And he made a lot of great points. And I think a lot of people were realizing, this Apple Vision Pro, it's not as great as we thought it was initially. I think that hype is starting to die down. That's why you're starting to see some of Apple pull back a little bit here. But it's also a nasty chart. You see how many times it's rolled over, right? I think it's going to continue to roll over the course of a few months. But we talk about Bitcoin, and we can go into Bitcoin next. This distribution, it seems what we saw, this top up here. Or is it Coinbase? Coinbase absolutely flying off the Bitcoin news, right? Just Bitcoin shooting up like crazy. It's up 14%. And now this is a really interesting chart. I talk about seeing how this was 5 waves down here. Now we're getting this massive move to the upside, and it's mirroring Bitcoin 100%. Now, the interesting thing is, with all the volume that we've seen recently, is it coming out of Coinbase? We've seen a lot of selling pressure out of Coinbase. I don't necessarily know we've seen a lot of buying pressure out of Coinbase. Seen a lot more on the Binance front when we looked at that chart yesterday. So seeing this here, earnings, people are kind of buying into earnings after a really good sell-off to start the year. I don't necessarily know if people are buying the rumor, selling the news of what's going to come, because maybe Coinbase does really well based off of some volume from the ETF. I can't see that not being a problem. It doesn't matter if the price goes up or down. I think sentiment more drives the price when it goes up. But it's going to be interesting to see how they report earnings. And I think people are getting pretty excited about it. But the dangerous thing is, look how many gaps we've created. 1, 2, 3 big gaps. Even if I look at this on the shorter time frames for an hour, let's see if we can find what type of pattern this is. Maybe this looks like a 5-wave market maker pattern, if you ask me. Maybe an ABC, then another 5 waves up. I'm interested to see how this plays out, because could this go up higher? Sure, if Bitcoin continues to go higher, which we can talk about now. But it seems like when I look at the smaller time frames for all of these, you're seeing the same patterns that have played out to get us to where we are currently today. I say this all the time. When you get these 5-minute pumps instantly, super fast, that's 100% a market maker pattern. Then it just consolidates sideways. If that news yesterday about CPI didn't come out, we wouldn't have seen this drop like this. But for nonetheless, it's consolidation. And then right after that, we got another move straight up on, see what time frame that was. 8:50, I don't know, GMT time, whatever it is. Whatever. So this, you can just see that the price just shot straight up. So Bitcoin's in a really interesting state. A lot of people are saying the inflows, like you said, I think that's definitely got merit to it, considering what the ETFs are doing. But at the same time, I don't buy this one bit when we see this type of price action. And the reason I say that is because whenever we used to get those used to come down the same exact way on the opposite side. Let me see if I can find it on the daily. I mean, yeah, we're seeing the same patterns that we saw back in, February 2023. Straight up consolidation, straight up consolidation, straight up consolidation, straight up consolidation, straight up. Like, these are market maker patterns. They're not necessarily organic growth. We do know that there's also some people that are able to sell some Bitcoin as well. I think I saw something along Genesis. They're able to sell like a $1 billion worth of Bitcoin.
Just saw that. Yeah. 1.6 billion in Bitcoin and ETH.
Yeah. So, I mean, is it any wonder why the price is shooting up here? I don't know. I'm going to pull up CoinGlass right now because I'm also looking at the funding rates. And this is why I say that I think that there is a sell-off coming here for Bitcoin soon. Again, I'm not going to get involved in this. I'm not doing anything in the market right now. Right now, I'm sitting in cash. I'm happy with my bank puts.
I said short squeeze yesterday, and guess what happened?
Yeah.
We squeezed those shorts, buddy.
Squeeze them tight. Why did I pull up the same exact chart? I'm an idiot. CoinGlass is what we need. Here we go. These are the funding rates, right? We talk about these when it comes to margin, leveraged, and swaps. Oh boy, it's a red day over there. But we know that red means that people are excessively long. The positioning is extremely to the long side. Everyone's more to the long side than to the short side. You see that's they're definitely paying shorts a premium to hold those positions open. And, this is dangerous, right? We're seeing that the stochastic RSI is 100 and 100 for Bitcoin on the daily. Some of these alts are doing extremely well. ETH is doing extremely well. Seems like it's very frothy. And could this push up to, say, 56, 58,000? It's very possible we could see Bitcoin push that high. I'm not going to deny the fact when you're seeing those market maker patterns go straight up, consolidation straight up. These structures should have ended a long time ago, but they're continuing, and we're seeing that there's smaller corrections that are leading to larger pumps to the upside. So I don't think this B wave is done by any stretch of the imagination. I think it's close to being done, but it's not done just yet. However, this is something you need to be careful about. These funding rates are nasty. The last time we showed a funding rate chart where it was all red across the board. Of course, Binance is the exception. Fuck that coin. But across the board, when we look at all of these, it kind of tells us that a lot of people are definitely buying into this FOMO, I think, here, and they're not doing it in a smart way. They're not buying spot. They're buying leveraged longs, and that's just creating more problems. This isn't the same exact reason why we saw Bitcoin drop last time when it was selling off from 49K down to 38K. People were going max long on Bitcoin using leverage and not necessarily buying spot. Are they buying spot now? I don't necessarily think they are when you see funding rates like this. I think people are gambling, hoping that they're going to see Bitcoin hit 60, 69K, just like they did, roughly 3 years ago, 3 years ago. So this is not a good sign. I don't like to see funding rates like this. If we look at the liquidation map, though, it's very dangerous still here because there is definitely room to the upside where a lot of people continue to keep shorting too. And it's like, yeah, I want to short at this level, but you have to understand the more shorts that continue to pile in, the easier it is to squeeze and just build that liquidity down below. So seeing those funding rates that positive, that's the reason why we're seeing it, because people are continuing to short, so they liquidate. So it's like, well, if they're liquidating them, I'm just going to continue opening these longs and I'm just going to keep them open because Bitcoin's price continues to move up. I mean, we're probably going to liquidate a lot of these positions right around here on the 7-day, probably to, I'll say as far as 53K is probably going to happen. 53 range. I'm not saying it's going to happen, but I'm saying it's probably going to see if it can push up a little bit higher. And by that, wiping out here, just wiping out about $1 billion or so in terms of liquidity. And we're probably going to see it add up back here because now down just to 45K, if the price moves down, we're sitting at about $6.8 billion of liquidity just in terms of long liquidation leverage. Can it go up higher? Sure, but I don't necessarily see the purpose for right now at this time of it going higher. The 51.5 we were talking about, 52, it hit. It's currently sitting at that 52 level right now, or it's right under it. I think that beyond that, though, we're got to be asking our questions. Why is the price going up? There's just no reason for it. So I think a lot of people are just making a lot of mistakes up there.
People are buying. We're going to call this a Taco Bell trade from now on, by the way. When people are liquidating their shorts, that's now the Taco Bell trade. So just keep that in mind.
Yeah, that's very accurate. I completely agree with that. But yeah, I just think people are just, and again, this is my opinion. I think people are going about the Bitcoin pump in the wrong way and for the wrong reasons, right? Everyone wants to make a fuck ton of money really fast, and they're using leverage. You know who else is using leverage? All the idiots out there in the freaking banking sector who are playing with derivatives, and you're waiting for these banks to pretty much implode in terms of their solvency. When I see this right here, I think people are just buying into something that's very dangerous. Again, I said the weekly has plenty of room to the upside, so we could see a push up. However, we do know that there's on average a 40% drop coming for Bitcoin in the pre-halving or the, prior to the halving, during the halving, around that time frame. So when we pull this up from where we currently are, I'm just going to pull this up real quick. You can see that we're sitting at 51,788. Let's say 40%. Let's see where that takes us now. Oop, that's 63. My bad. 40% from where we currently are, it takes us to about 30,000, a little bit under 31,000. And that fills this gap that's down here. I still think that we would probably come down a little bit more, maybe get a wick to 29K or so. But that would find support right around here from June of 2023. Now, what does that mean? That means that maybe we find a bounce from there. But I do think that in the coming months, we are going to still see this move to the downside. What we are seeing here from that chart that we showed a few days ago, Wyckoff distribution, played out to a T. Here's the first move to the upside, and then here's the mania top that comes right after it. Gets everyone believing in this shit, and that's fine if you believe in it too. But just be smart about how you're buying into this market. But it seems like more than anything, there's plenty of room to the upside on the weekly. But if we still look at the monthly, that's completely overbought. So maybe we do get to the weekly and it's closer to the overbought territory, and that's when we start to see a bit of a pullback. But right now, 100 and 100 on the monthly just tells me that it's absolute mania. I mean, let's see, from the all-time high up here, we weren't even up there. We were at 31 and 24, and then even when we sold off from there, well, interestingly there, when we were back in April 2021, that was 100 and 100 on the monthly. And, in a bull market, people forget that this dropped 50%, right? It dropped about 55% in a bull market from April all the way to the summer lows in 2021. If we're in a bear market, what do you think is going to happen there? Right. So it's just something to keep in mind. I think people have to have that perspective. Crypto is very dangerous right now. We're going to have to wait to see what comes of these Coinbase earnings and also what happens with Bitcoin. But I do think that with the funding rates being the way they are right now, we are going to see a bit of a sell-off at some point. The question is it going to be a big sell-off, or is it just going to be a little bit of one that kind of gets us the next legs up to maybe see some of those 55, 56, even $58,000 Bitcoin? Not saying that's going to happen, but I'm saying it's possible. And I'm open to the fact that I could be wrong, because at the end of the day, the charts still say that we need it.
You can't talk dirty to me like that when my wife's in the other room, okay? Like, let's calm it down a little bit.
It's Valentine's Day infidelity. I'm sorry. I'm just kidding. But the other thing is too with Bitcoin, it's the ABC waves that we count. I know I sound like an idiot reciting his ABCs whenever I say that, but when we look at this on the macro, ABC pattern, as long as this B stays below this A wave, then we're still due for a new low in terms of crypto. If this B wave gets to the height of not even the A wave, the origin of where this started, and then we're probably going to come back down to the November 2022 lows. That's just going to be a flat correction. However, for the time being, I do think that we still have the possibility of new lows in crypto. Not ideal for people who are super bullish, but it's definitely possible given what we are seeing in the charts. And I'm willing to have the macro outlook on this year or so, looking out where we could potentially be.
All right. That is going to be how we wrap it up for today's show. Appreciate everybody for joining us. Scotch and Stocks, welcome back. Chris, Randy, as always, appreciate you guys being here as well. If you have not yet, do us a favor, hit that like button, subscribe to the channel, drop some comments, share us out, whatever. We'll be back tomorrow to take on the latest in the markets. With that being said, stay safe out there, everybody. We appreciate you, love you guys, and we'll see you next time.
Take care, everyone.